All right, we're going to go over on this snippet some more transactions. Hopefully, you've seen some of the other ones I've done. This one, we're going to be talking about some expenses on how we're going to look at that. Now, remember, expenses don't necessarily mean we've paid cash for it, but we've used the resource or whatever it was that we used. Could be someone's labor, their time, whatever it is. So we're going to record that in the accounting period in which we've used it. So that's the matching or expense recognition principle. So let's say that we are going to use some time and pay labor. Okay, we have some employees that have worked for us, and we're going to pay. Let's start first off. Let's say we're going to pay it to them in cash. All right. So the first one we're going to do here is we're going to come over here and we're going to decrease our asset. All right. We're decreasing our asset. Let's say we're gonna pay $1,000 to our employees. It's obviously it's gonna be way more than that. So we're going to decrease our cash asset. Now this gets tricky, and I want you to pay attention to this, okay? Because when we come over here to our expense account, even though we decreased our assets, we are going to increase our expenses. But Brian, if you increase expenses and decrease asset, aren't we out of balance? Well, eager young mind, we are not out of balance, okay? And the reason for that is if you look at our equation up here, which has kind of gotten squished a bit, our expenses are subtracted from the accounting equation. So by subtract, when we increase that account, we increase a subtraction, which is basically saying we're decreasing the overall side of that accounting equation. So think of it this way. If you have $20,000, I wish, right? Maybe I should say $20. If you have $20 and you go to the store and use a credit card and pay $5 for something on that credit card, well, you still have that $20,000 cash, but really you had that expense of $5, so really you only have 15. Okay, so that expense, even though the amount owed on your credit card statement says $5, it's an increase, but you owe it, so it's a subtraction to your overall net worth. Okay, same concept here, but when the expense account increases, it's a decrease to the overall situation with the company. And if you'll notice, we also subtract our owner withdrawals as well. So you can assume the same concept that when an owner pulls something out of the company, we're going to record it and say, hey, we increased this account by the amount of the $5,000 she pulled out, but the asset, whatever she pulled out of the account, is going to decrease, but the owner withdrawals is going to increase because it represents what amount was decreased to the company. So I hope that was clear. If it's not, please get with your professor or specifically me, and I'll be happy to go over that with you again. All right. So quick snippet on how expenses work. Maybe we can do another one really quick. Let's say that we got a bill for, let's say we got a bill for our utilities, okay? And we got it in August, but it's July, but it was for July, all right? So we're gonna go back to our books in July, and we're gonna record, let's say we owe this money and we're not paying it yet, okay? We're not gonna touch our assets at this point. We're gonna increase our liabilities. Let's say it was $300 bill, okay? If it was electricity in the summertime in Phoenix, let's say it was $1,500 for electricity. That liability is going up, all right? And our expense account is going up as well because we owe it, but we used it. But we're going to subtract that from our liabilities. So hopefully you caught on to that. Because we're dealing with the same side of the accounting equation, one liability is going up, the other expense, while it went up, it actually went down because we're subtracting it. So it did that inverse flip, kind of like what we did with the assets when we were buying assets with cash. It did that. It's the same thing. We're dealing with one side of the accounting equation, which is why we see that it looks like they both kind of went up, but really they offset each other. All right, and then all right, then we're gonna go ahead and stop this one, and we'll see you in the next snippet.